Hey everybody, welcome to Trade Caps Exclusive Analysis. In today's video, we're going to be discussing the mega cap earnings which are out, the indices, energy markets, pretty much touching base on the broad market as a whole. Alright, let's dive right into the S&P 500 here. You can clearly see it was a positive day for the indices. The S&P 500 finished up 0.27%. Again, we're really just trading at this little resistance point here, 456. This market is still parabolic in nature, overbought, but trending strong as of now. The after hours, you are getting a slight pop in the indices right now. The IWM is seeing a little bit of weakness. There's some regional issues potentially going on, although it is somewhat up about 5 cents in the after hours. The QQQ is strong in the after hours, getting a nice little bounce. That's partially just because of Google ripping higher. So GOOGL reported earnings today, and basically they're trading all the way up to 130. So there's this beautiful consolidation that has happened. And the big thing that we have to really pay attention to is if we get a close above this 129, this previous pivot, that's going to be super bullish, and it sets up a bull flag pattern that we can really look to play. If we do a measured move of this high to the low, you see we can look to play a move to about 143.50 on Google, which would be a nice little potential trade. So it's going to be a big close. It has to hold most of the gains. Obviously this is a great initial reaction, but certainly things can change in the earnings call it now. But it is one of the stocks that was consolidating below, by the 50 daily moving average, and it's now looking to pop. Alright, Microsoft is a little bit different right now. So Microsoft closed at 350.98 and it's down trading at 344.44. So weakness in Microsoft, but it's really close to the opening range as to where it traded. But nonetheless, it is getting slightly clobbered in the after hours. This one's interesting because I think there may be some put opportunity to play. Snapchat is another interesting one that is hurting the market. So the ad revenue getting complete. They actually did a beat on earnings, I believe, but having a big drop. You can see the line that they're retracing to. So technically speaking, this is Snapchat's support. It's breakout trend line that it actually just tagged. If we adjust that trend line, you can see, look at that beautiful pinpoint to a T. But that is a nasty drop. That's probably going to be hurting Meta as well as some couple sympathy plays that will initially react negatively. Actually, Meta is holding up relatively well here in the after hours and trying to actually push up. So good start for Meta. Good thing for Meta shrugging off that sympathy play as of now. But we'll really have to see where things close. Remember, Microsoft's still a very heavy weighting. Obviously, Google is too. Right now, Google's outpacing the Microsoft drop, so therefore the indices are getting a slight lift, especially around the mega cap tech companies at this point in time. All right, let's move along to the indices. Let's talk about the Qs, since the mega cap earnings are what's going to be reporting. So the Qs have been the indice that's showing the most amount of weakness, and this weakness now makes sense because there was people taking profits ahead of the mega cap earnings, and as of now you can see Google's getting a big lift, Microsoft's trying to go positive, so there's certainly going to be some strength. We did pierce and confirm below that short-term 7-day moving average, this yellow moving average over here. That is a big level. If the markets can actually get above that level on a daily close, so we're talking about 380.20, right now we're trading at 380.12, then it does stand to suggest we're going to go up and fill this gap at 385. But these markets are still very extended, and let me be clear, there's some pretty nasty weekly reversal signals intact, and you can see on the weekly 20 or weekly 7 moving average here, we really haven't got a daily close below that since February. So we are due for a weekly close below that key moving average, which is why we're very extended in nature. We still have Apple, we still have Nvidia, we still have we still have Meta as well coming up. So there's some big names that could influence this market positively or negatively, and right now we'll just have to wait and see. We did open up a new trade today based off of the IWM. Right now, based off of the KRE. So KRE saw a little bit of weakness today, specifically around some news about PAC-W being taken basically over. And there is a bullish potential pattern that is triggered, but you are due for maybe a little bit more of a consolidation pullback. And if there's news headlines, negative news headlines that cause a bank to be basically drop about 27% in the matter of less than an hour, basically look at that nasty candle. So this bank was taken over and usually when they announce a buyout, it's positive news, but this ended up being extremely negative because it likely means the valuation and shares are going to be diluted for those that own PACW. But that's a nasty candle. I mean, you talk about that volume, 49 million, way above the average, down 27%. And if you look at the price action here, that happened in 10, 20-minute candle, 30, 40, and then 50, 60, 70, 80 in some after hours. So really in an hour, that move obliterated a lot of the gains, and that's never healthy to see in the banks. Notice how this was shaping up to have that inverse head and shoulders, and it's got rejected. If this turns into a failed pattern and it starts to spill into the rest of the regional banks, that could be very, very negative. I like to look at PNC as well, which is the largest largest regional bank, and basically that pattern is still holding up okay as of now. So if you draw your trend line, basically your resistance is here. If you lose this support level at 132.43, if you get a daily close below that, you're likely probably going to test the low end of this range at 124.50, give or take. So right now PNC is holding up well. It does have this bullish alignment to trend a little bit higher. I have a tight stop loss against my trade, but needless to say, when there's negative news and rising yields, I never like to stick around in these regionals for too long because they could see some pretty horrific downside action. Let's take a look at the yield market. So today the yield market basically cooled off a little bit, but ended up bouncing off of the lows, still holding above that 4.84%, which is the short-term 20-day moving average. So you're still above the 20-day and you're still above the 7. It's about to have a bullish crossover, the 7 and the 20. That definitely means there's likely more upside. Obviously, what's tomorrow? Tomorrow we have Jerome Powell and the FOMC announcing their next interest rate hike. So that's going to be a big, big market moving event. And the big question is the Fed going to come out extremely hawkish, or are they going to have dovish whispers of a potential pivot? I think if there's dovish whispers, then the pivot will initially ignite a small rally, but typically, historically speaking, that pivot is never really a good thing. We also have Meta after the bell, Coca-Cola before the bell, ServiceNow after the bell, Thermo Fisher, TMO, UMP, BA, AT&T. So some pretty big important names, well over the 100 billion mark, and Meta obviously 747 billion. So that is also very, very influential. But as of now, the 2-year yield is expecting another hike, which would bring the Fed fund rate up to about the 5.5 level. That's going to be a big, big level for the overall Fed fund rate if they raise tomorrow by 20 bips. Right now we're sitting at around 5.25, and it's set to go to 5.5, so that would be a big, big increase. The last time we really traded at that level, let's go back on our charts, on the weekly chart here, you can see if they raised, the last time they raised, this was really the peak before the 06-07 decline, big decline. And then basically the last level there was the .com. So we're hitting .com levels, December of 2000, where yields started collapsing and causing some interesting issues. And we're going to have to pay close attention to this period that we're in as rates continue to go higher. Obviously the economy is still chugging along well. Data is coming in better than expected across some areas, which is always positive, but things can change over a 1-quarter period. You can go from robust uber bullishness to very, very significant weakening data. So we're going to have to pay attention to a lot of the manufacturing PMIs and overall what the markets are going to be doing, what the yield market's going to tell us. Right now things are holding up pretty steady. Let's move along to the dollar. The DXY today took a little bit of a consolidation day, and arguably it needed it. Now the thing about this consolidation is that it's still holding technically above this 100.81 level, so that is very bullish for the dollar. As long as it consolidates in this range, it can actually test this 102.45. Being the fact that you got a daily close above this key white trend line over here leads me to think that we're going higher in the dollar. The big thing this week, if we get a weekly close above this key level, these two pivots, then that is extra bullish for the dollar, and it means that we could have a much, much deeper and higher oversold bounce. And that would align with the inflation expectations of the market. I mean, you look at oil, WTI crude, breaking out of a 13-month downtrend pattern, looks primed to basically test this 81 level and then even higher at 85. Then you look at natural gas. This thing just keeps trying to dip down and gets bought right back up. Today it went negative. The last 3 days natural gas has gone negative, and basically today it ended up going positive. So once again, people are buying that short-term 20 moving average. You've had a bullish crossover. You have an inside major bull flag pattern, bullish wedge pattern, and then you have a little micro bull flag pattern starting with an intraday inverse head and shoulders. So there's really three bullish technical patterns that you can analyze here, and it's looking very promising to move higher. What's interesting is I'm waiting for AR earnings after the bell. They are dropping slightly. You also have EQT that is after the bell, which is dropping as well, but that really doesn't mean much in the sense that if natural gas continues to go higher, that's where market participants will price forward look and price in higher earnings from these companies, just because the natural gas price has been so suppressed for quite a long time. Looking at gold, gold typically always sees downside on Fed day, historically speaking. Right now it's looking poised to move higher. It's actually holding inside of this wide range green bar breakout. Needless to say, you're just in this consolidation range because you never confirmed a second daily candle above that. You tried and you got rejected. What I'm looking for is, do we get another daily close above this 1965.48 level? If we do get a close above that on a daily basis, then we can test the high pivot range where we got rejected before. But I don't think gold's going to get through there just yet. It's going to have to really coincide with the yield softening a bit more, maybe some fear from the regionals. There was obviously interesting regional news today that caused it to reverse on high volume, so we'll have to pay attention to that and see if that amounts to anything or if it was just a one-day event and sell-off news-driven headline. All right, let's look at Bitcoin. So I'll pull up the BTC USD chart, USDT chart. Bitcoin is basically testing a critical area here. Let me pull on the weekly chart because this is actually a weekly chart level. Just simply drawing a horizontal trend line, connecting as many pivots as you can here. I like to go with these two major ones. You can even draw it with this third one over here. So it connects with 1, 2, 3, 4 pivots there. And then you go back to your daily chart. Right now, that's the level we're teetering at. We're slightly below it. We haven't confirmed. If you lose that level, if you get another daily close below this wick, so we're talking about just below 29,000, you're going to go down and test this white trend line. This has been your big support level. And the big thing about this is that you got to watch out for this potential mini M-top pattern that is shaping up. Now, we can't entertain it because it hasn't really broken this upsloping trend line, but we get more bearish consolidation underneath this 29.2 level, you're going to have probably a sharp move down to about 27, maybe a pierce of 27,000, potentially even this pivot if there's extra fear in the market. That's really going to sum up today's price action. Let me just scroll through to see if there's anything else that I'm watching. Visa after the hours, obviously reporting, but really the big one is Meta tomorrow after the bell. So if we pull up the Meta chart here, what I'm kind of looking for is actually a retest. If they beat, I'm looking for a retest of the double top where it would be likely a better short opportunity. It is very extended, but being the fact that Meta has actually cooled off for a few days into earnings leads me to think that you could get a bounce. And let me be clear that we never officially filled that gap sitting at around 323.50 so, or 322.95, just a pierce of 323. So don't be surprised if Meta could actually get a pop up to that area. I think what you're going to be having here is maybe some potential people trying to front run the earnings report, being the fact that Snap is getting smoked, you know, closing at 12.50 down to 10.38. Basically that size of a drop right now puts Snap down 17%. And if people try to play that sympathy trade and go all out to short Meta, thinking their ad revenue is going to be down and whatnot, the market may burn them. So I'm not going to front run the trade, but if it does pop into that gap fill, that would be a superb level, very good technical resistance, and likely a potential top, at least until we get a deeper pullback in the indices. On that note, I'm going to sum up this video here and we'll call it to an end. Please give this video a big like down below. Subscribe to our YouTube channel. Comment to see what earnings you're playing, if you're playing earnings. Just remember, it's always risky to play earnings, especially if you're doing options. The volume's thinner, the volatility, the IV crush only exponentially increases, and just be mindful that there's a lot of more manipulation just due to lower floats and lower volume in the after hours than the regular trading hours. So it's going to certainly be interesting as we progress into tomorrow. Mega caps filled with the FOMC meeting. Certainly